Okay, good morning, good afternoon, good evening, wherever you find yourself. I hope you're doing well. Welcome to the New York session. I hope everything is okay with you. So we are going to have a kind of a brief session, but not brief, because we've already covered most of what price is already doing. So let's start with the dollar index. So yesterday we spoke about the idea that the dollar index has to go to 99.14, 99.55, and then the main level, which is the 100.26, and we are not going to change our bias until that has been fulfilled. So far so good. I think last night when we had the rate announcement, price actually started showing signs that it wants to go up. We did have some nice move around 6 p.m., which is the time that I told you that the rate announcement was going to happen. Now, something interesting happened before that. If you look at the New York session, okay, it actually went down, right? It went down. During that time, if you understood that the high time frame is meant to be going up, because that's what you're always going to be referring to, the high time frame. If you understood that the high time frame is going up, then that drop here was a buying opportunity, because that is what discount. So price came down and then started rejecting. This very first candle at 4 p.m. that was an entry, because as soon as that 4 p.m. candle closed, you go long, because that candle was a sign that all the move down was a manipulation. Now, you're not buying because of this pattern, but you're buying because of the higher time frame had been going here and here. And then obviously, since we don't directly trade the dollar index, right, you have to look at the opposite of the dollar index, which is the euro, and that was here. That's the one that I was talking about yesterday, that if we pull back into this area, you want to sell short. Only problem is the stop loss was a little bit too close. It should have been up there. So if you took it and it got stopped out, no problem. I also gave another opportunity this morning by coming back to the breaker. Okay, so even if you got stopped out with that, which I don't think you should, this was another trade where you sell the breaker with time of the day, and I told you where they're gonna attack. This equal low, this low here, and then this one, and they've done that nicely. Actually, we are yet to take out that one, which I think they'll do that this afternoon. Okay, so far so good. I think this is where the euro is coming, the 1.1528 level. That is where we're coming. Now after we get here, I will reevaluate, because this is a nice area where price went down and then went up and broke and made a new high. So somewhere in here, price might struggle a little bit. So once we get to that level, I will basically reevaluate and then see what the market wants to do before we commit to anything else. Okay, so yeah, look for a continuation to the downside on the euro to one. Let me sync this level 1.15281. Okay, that is where I think price is going. Ultimately, probably the 1.15 level, that is where they might reach for, because we are below 1.6, which is here, 1.6. That is where we had this small little pullback, and most of the time the market likes reaching for full figures. When I say full figures, it moves from, let's say, 1.14 to 1.15 to 1.16. That, so 1.15, 1.14, 1.13, that levels. So since we've gone below 1.16, the key next level will be 1.155, which is where we bounced off from right now. Then the next one will be 1.5. Okay, so 1.5 here will be the next key level, which correspond to almost the midpoint of the fair value gap. So if we reach this 1.52 level, we might go all the way to 1.15. Sorry, 1.15. So let's draw a line. There. Okay, so these are the downside objectives that I think that euro it's likely gonna reach for. So you're gonna be looking for continuation. I like the drop that has happened here. Price will not come up here. Price will not come up above that candle's high. Okay, price shouldn't come here. So inside this candle, it will find support and then resume going down. If they come up above this, that's not good anymore. Okay, this drop here, that's very it's like this one. Okay, and you can see they never came back above it. That's how we call them void. That's a void. That's how they work. The price should never trade above the void. If it does, that's a potential reversal taking place. So let's expect them to. And what it's doing now is actually normal. Sometimes, not even sometimes, it does it all the time. It will engineer that this equal low and now this low here. So support and resistance traders will feel like this is going to go up, so they will buy it, and then eventually it will be crashed. Okay, so between 2 and 5, this low will be gone, and then probably reach for that and that. Maybe not today, but it will eventually reach for these levels. British pound, same thing. I think I spoke about this equal low, that price will take them out. Okay, too clean. It is too clean. So there we go. Yesterday they engineered another one. So if I extend this, you can see came very close to it and then went up. This candle, that's a void. They will not trade above it. Pull back and then landing session. So I got a sell in here again, and then price slammed down, attacking these lows. Now I think they might trade here. They might trade here inside that fair value gap, this one here. So let's that fair value gap, I think that is where price wants to go, because right now they are trading through this one here. That is a gap that has been holding price. 1, 2, 3. Now we breached it. That will become a resistance, okay, and then we will continue going down. So the next draw on liquidity is 1.30621, right? Again, this big down candle, price is not gonna breach it. If we breach it, that's a reversal, but I don't think that will be the case. So that's an ideal level that you can protect yourself here. Or we have an up candle right there, you can put it above it and then expect a continuation to the downside. So yeah, so again, the numbers, we are moving from 1.32, okay, to now 1.31, which is here, and then eventually 1.3, which is right exactly where the fair value gap here, right here, 1.13 or 1.3. Okay, so I think that is where we're gonna go, but first we are looking for 1.31. So 1.31 is here. We might get a bounce off from that level, 1.31, and then it will continue going down. Okay, so let's go on to Euro Pound. So Euro Pound is screaming higher. Where we are now, maybe a pullback is possible, but it looks like they are reaccumulating again. So this down candle will not break. We will continue going up. So protection below the down candle and then a continuation to the upside. But again, I mostly prefer sticking with the euro and the British pound for a potential trade. Okay, but if you like to trade it, look for a buy. In terms of targets, let's see where we are likely going to go above this candle's high. That is a key level price can reach for. Give me a second, guys. I'll be right back. Okay, let's continue. Let's go to gold. So gold, I think I spoke a lot about this yesterday, that I am roughly 20% bullish or 30% bullish, 70% bearish, because I don't think, based on the fact that they've gone through this down candle, price is going to go up. No. And if you're going to buy, wait for them to go above 4024.71. that will close the fair value gap in. Then you can look for the longs, because this price action here is a sign of bearishness. The fact that we've gone through this down candle, and we have a fair value gap, this is a breaker. We call it reaccumulation, right? They bought more here, so now that they've broken it, they will distribute there. So price will sell off from here and then target the next area of accumulation. Okay, so this down candle, the low of it will be the next target. And like I said, price is likely gonna go 50%. So if you measure the range, 50% is here, right? And then 618 is here, then 70.5 is there. So in between this candle in here, and that is where I think gold is gonna come. But you know, we take it one day at a time. Right now it's like this gap is holding, so we're expecting price to go down. And especially today, I would want to see them take out yesterday's low. Okay, I would like to see them take out yesterday's low. So with where price is at now, it's giving a vibe of going for the low of yesterday. Okay, it's giving a vibe of going for the low of yesterday, because it pulled back into this fair value gap, this order block. Now this is a high probability order block and a high probability fair value gap. Why is that? Because that gap over here created this, traded through this down candle. Okay, so that gives you this range as a dealing range, that if price pulls back, you want to sell, continue going down. So this low here is a drawn liquidity, which is yesterday's low. I'm sorry, that one. All right, so I'm expecting lower prices for gold this New York session. So this is the impulse, this is the pullback. If we measure the range, 79 retracement level, and then we are rejecting. Okay, so I'm not really a fan of gold right now, but if you want to trade it, then this is something that is possible. And like I was saying, it can continue going down to here, which is the 50%, right? It can continue going down to there. So you are more than welcome what you want to do with it. If it stops out, right, because the stop loss is here, if it stops out, look for a red candle, or basically an up candle with immediate close. The moment you get that, you sell again. So if possible, I think we got about 33 minutes to go. If this candle closes as bullish, the next one closes as bearish, then you sell the following one, because that will give you an up candle, and then close below, you sell the next one. Okay, if you want, you can sell this one too. It's all fine. Okay, so that is gold. Let's go to crude oil. So crude oil seems like that target, or that area that I wanted to see price go, is not happening. But from the weekly perspective, that is still probable. Okay, so we have a swing low here. This down candle it's an auto block. Okay, so it might react off from it and then come back up again. So I'm not really convinced that we are going down yet. Nah, I'm not convinced. So stay away from selling. That is all I can say. Stay away from selling, because this thing can scream all the way up to clear out this high before we go down. So crude oil, my opinion, stay away for now. Wait till you get a move back up here, or wait for price to give you a move back above this weekly high, this candle's high. Okay, and then finally ES. I think ES, we are almost there, but these two, let me go to the daily over here. It's showing an accumulation, which is the down candle. We've tapped into this gap here. We also have a volume imbalance, so lots of resistance. So what it can do is take out yesterday's low, because the news event did wipe out the order block here. So let me take that one off. Watch this low. I'm gonna take this first target off. Okay, so watch yesterday's low. As soon as they take it, look at how it's coming down. So we have an up candle, we have this down candle, and we have this attacking the low. Whilst we are bullish, we could be rejecting to go up. Okay, so as soon as we take out this low, do we get an immediate close above a down candle? If we do, we will be coming up to the 6980. Whatever happens, that's where we're going anyway, because this is just similar to these two down candles. It's just reaccumulating. Okay, whatever happens, that is what is happening. They are just reaccumulating. So with the reaccumulation, we will be looking for price to continue going higher. Hence, just patience. Let price finish reaccumulating. And how you know it's finished reaccumulating is by waiting for a previous day's low to be taken. Once a previous day's low is taken, then you wait for an up candle to go above a down candle. Okay, the last down candle taking out the low, you wait for an up candle to go above it, and then you start looking for your trades. So right now they are almost there. Wait, let them take it, reject, then you buy. If they doesn't reject, like I said, we have the volume imbalance as well. So at some point they will resume going up, and it will start with a quick sharp move back up above a down candle, like something like this. Quick sharp move, quick sharp move, quick sharp move above a down candle. That will be your cue for you to look for the longs. Okay, all right, so that is that for the all right, let's move on to the crypto market. Okay, so with the crypto market, the gap failed yesterday. We closed below this right here, and that meant that price is gonna come back down. So let's go back to the weekly. This is what I didn't want to see, which is price taking out the previous week high and rejecting. That is not good sign, because that would mean this up candle becomes redistribution. They sold in here and price is going back down, but it doesn't confirm that we are going down, as in all the way down here. It doesn't confirm that. It depends on how price will trade below this low, because they could be coming for the previous week low one more time, and then price will go back up. So as it stands, that is where it's going. So as it stands, price is going for the previous week low, 106.631. 106.631 is your that's target for Bitcoin right now. So if you're looking to trade it short term wise, you can look for sell. Sorry guys. Okay. So yes, as I was saying, price is likely gonna go for this low. So you can basically look for continuation if short term wise. Okay. That means Ethereum is gonna do the same. This low, previous week low, is gonna be attacked. Solana, same thing. That previous week low is gonna be attacked. This low here, let me sync it, 177.28. That low is going to be attacked. Ripple, I don't think it can, because it did close above this previous week high, so it might just be coming for a discount somewhere here, 2.42. Now I've said it several times that the market, it's very favorable to the currencies, okay, less favorable to the crypto market. Okay, now when I say that because the control level, the control mechanism level on the currencies is so obvious than the cryptos, because the crypto market is free, open, everybody can trade it. It's not centralized one. It's digital, so you don't know who has what. Okay, but maybe with the actual fiat currencies, you do have banks that are clearly, obviously trading it, and they can't hide their intentions. They need to trade the market because of business decisions. They need to trade it. For example, Microsoft needs to trade their currencies. Google needs to trade currencies because they have employees around the world and they will have to pay them in their local currencies. So they have to exchange money, right? They don't pay them in Bitcoin. They don't pay them in Solana or all these cryptocurrencies. Hence, it makes the fiat currency easy to trade, easy to monitor, easy to predict. When it comes to the crypto market, it's totally different. It's decentralized more than the fiat currency. At the same time, you don't know who is trading what, because everybody can trade. Anyone around the world can have lots of them, and they could be dumping it or pumping it. Okay, so the algorithm is not really highly efficient on the cryptocurrency. Okay, because it can go crazy at any time, and you've seen lots of examples of it. So my advice is, do not put all your eggs in one basket, or do not put all your basket in one egg, if that one is better, because you might not know when a move that you're not expecting will happen. As you can see, I've not been, and I'll be honest, I've not been really good at predicting the cryptocurrencies, and that's not because of incompetence. It's because of the lack of the algorithm signatures working much more on the cryptocurrencies. Okay, because it does move in a different way. Lots of consolidation because of lack of liquidity. It's not a lot of people, okay, around the world trading the cryptocurrencies with lots of money. That will be obvious on the chart. Okay, so with that said, this is likely gonna come somewhere here. Hype, that was my favorite if I was going to buy, which is still my favorite. And looking at what the cryptos are doing, I think, let me remove this and then place that. Okay, so this is what might end up happening with the current move. We might be coming to that 50% or the 618 area before any move to the upside will transpire. Okay, so you're looking for maybe a sell to go down, because now they've broken down. We are going to break this down candle and then come to the 50%. There's an auto block at the 50%, and then this area here. Okay, or we can get to 50% and resume going higher. AI 16, the gap did not hold. Okay, that gap did not hold on the daily. The weekly, this gap here looks like it's the one holding, so definitely they will come back for the previous week low. They will come back for the previous week low, so look out for a move to the downside to take out previous week low. Once that is done, I will re-evaluate and then see what price is gonna do. Okay, so AI 16, previous week low, looks like where they want to be going now. Chachki, I think the bullishness has short-lived, but on the daily, I think we still have a dealing range. We have this low to this high back down. So until we lose this low here, I'm still favorable to the upside. Okay, let me double check the weekly. Yeah, on the daily, until we lose this down candle, I'm still favorable for price to come back up again. Okay, so we are at a decent level, 70.5. so buying here to go up here based on the daily. Okay, on the weekly we are still bearish, but on the daily it looks like price wants to go up to here, and then we know weekly is still bearish, so maybe once they rebalance it will continue going down, but we are so low that downside is limited. Okay, this is the all-time low, so it's limited. If you're selling, you're limited in terms of profit. All right, so that's pretty much that for the cryptocurrencies. To be honest, personally, my advice, this would be good for long term only. If you are someone that wants to invest, put the money there and totally forget about it for the next decade, or for the next 3 to 4 years, that is something you can do. Okay, this is my opinion. It's not the truth, but it's my opinion. For the next 3 to 4, maximum 5 years, it could be, but to be looking for right now, buying and expecting a greater return, as long as the fiat currency still reigns, this is gonna keep giving you anxiety. It's gonna keep giving you that euphoria, we are going up, and then dread, we are going back down again. Okay, that is my honest opinion. So if you're doing any sort of trading on them, day trading, not good. Short-term trading, not good. This is like stocks: buy, hold, forget about them. And then if you want to trade, come on to the cryptocurrencies or even the indices and then trade like we do. Okay, or balance them. That's just my advice. Okay, let's go back to the cryptos. Let's go back to the currencies. You can see that price has taken out the low. It's currently rejecting. It dipped into that gap. Volume imbalance is rejecting. So watch this up candle or this down candle. If we trade through them during this New York session, that is your clue. We are going back up again. All right, and dollar index, we will continue going up, so stick with the upside. Do not switch, okay, until I say so. If you feel like it's reversing, you can go ahead, but stick with the 100, at least the 100 level. Okay, all right, that is all I have for you for today. I will see you same time monthly. The Bitcoin monthly time frame is bullish. It hasn't changed. Okay, monthly is still bullish. Now, okay, thanks for bringing my attention to it. If what I said the last time that price rejected here, okay, what I said, if we go below that low, which is this low here, and we close based on the weekly, because the weekly has not closed below that yet. This level, this level here. Okay, that one. If the weekly closes below that, forget longs for now and then focus on coming here, because it's similar and exactly like what British pound is doing. It will be similar. Something like this. We are trading above a high, we get a confirmation, we'll be looking for price to be going down into a pullback, not a reversal, into a pullback between this low, this side. That's the basis of me looking for lower prices on this British pound. So same thing here, we are trading above a high, we have a fair value gap here. If they close below this low on a weekly basis, then price will come down, but it will not go all the way down. It will just be a pullback, right? It might dip, similar to this, because it's in the phase of accumulation. What's the phase of accumulation? Price pulls back into a gap and then continue. So here, that's a gap. Price pulls back to it. Here, that is a gap. Here, that is a gap. So this is similar to that. And then here, that is also a gap. And this is a gap. So if we close below that low, this is where it will come to and then resume going up. It has not changed direction. It will still go up again, right? But the idea is, I don't want them to be always pulling back to gaps. At least they need to leave a gap open and then continue going. When they leave gaps open and continue going, that's a sign of strength. Okay, it shows that the market is strong. But if they keep pulling back into gap before going, it means that the money, okay, is weak. So it has to come back into an area to accumulate more. But it doesn't need to. We want them to just keep pumping in the money, because if they keep pumping it in, then they will leave the gaps open. Okay, so the reason why I would prefer it doesn't do that is this will show that this money is now left open. They will just buy more here and then continue going up. Okay, so that's the high time frame narrative. So this low is key. That is why when it first came there, I said we needed to reject here on the weekly time frame, and it did. But I think money is not enough. They couldn't sustain the move, and now we are coming back. But coming back, I'm looking at how it's gonna take out this low. Does it take it out and quickly reject back up? If it does, then obviously this whole move to the downside is another buying taking place, which is that weekly candle. Another buying taking place there. Okay, so the monthly time frame is still actively bullish. It's just that we need to wait patiently to see what it really wants to do. All right, okay, so that is why patience is required here. Okay, so that is it for now. I will see you all same time tomorrow for another session. Take care.